it shouldn't be a very binary thinking. Okay, Bitcoin just gold. So gold means you shouldn't do anything. And the network should be nobody use it. Everybody just here to hodl. I think in the future, we're going to have the economic debate and the security debate when nobody actually using the network at all the Bitcoin holders just getting the Bitcoin exposure through ETF. There's no on-chain activities happening in Bitcoin network. I don't think that's the best future we sign up for.
Here we are with Charlie Hu, the co-founder of BitLayer, the fourth largest Bitcoin layer 2 with 300 million of TVL just a couple months after launching mainnet. Charlie, it's great to have you on the Defiant Podcast. Welcome.
Thank you, Camila. Thank you for having me.
So this year has been all about Bitcoin. It's really dominated the narrative. Bitcoin recently reached a new all-time high. It's really kind of solidified its place as a global store of value. And on top of that, there is a growingly more active Bitcoin layer 2 ecosystem with DeFi and more programmability. And this is where BitLayer really comes in. So we'll get into all of that. But as always, I like to start from the beginning. And yeah, would love to get a sense from you, learn more about your background and what led you to start BitLayer.
Yeah, thanks, Camila. Great to be on the podcast. Looking forward to talking more about our story. So about myself, briefly, I've been in the Web3 space almost 10 years now. I kind of always categorize myself as an ecosystem builder. So my first Bitcoin journey was in 2013 when I was in Amsterdam. I did my master's degree over there, had my previous Web2 startup. It was a lot of kind of libertarian talks across like the European meetups thing. So the Amsterdam Bitcoin meetup was actually my first interaction with Bitcoin, actual Bitcoiners. So that was early 2000. That was my first time get to know Bitcoin miner. What is Bitcoin mining? With the organizer who hosts the Bitcoin Amsterdam meetups, they brought the FPGA miners. So for the people who kind of are early in the space, right, the ASIC miner, were made by Bitmain, many other mining companies, that was later stage, right? In the beginning was CPU, later on people use GPU, and then FPGA, different type of miners to mine Bitcoin. For me, that was my real vivid first interaction to know what is proof of work, how people are actually mining Bitcoin every 10, 20 minutes, right? So it gets me pretty interested to learn. And I revisited the Bitcoin white paper. I read that actually was 2011. I didn't really get it, to be honest. And after that, I kind of start to realize, okay, that's pretty interesting. It's a global decentralized network. Miners can actually mine out Bitcoin by providing hash rate. And this proof of work consensus was pretty interesting. But I would say my real Web3 journey started from Ethereum. Early 2015, in Berlin, I got to know Ethereum. Ethereum core, Ethereum, like the dev team, like especially Parity team, they were building a lot of interesting stuff. So that was my first interaction to understand what is a water computer, like smart contract, building programmable use cases on chain, all that. That was pretty fascinating. A lot of good ideas actually came from that. Ethereum had the first DevCon in Berlin. Obviously, the rest of history. Ethereum had some issues with the DAO hack. They had an Ethereum fork, right, with Ethereum Classic and Ethereum new version. And the Parity team eventually started Polkadot, right? So my very first major involvement in the Web3 space was Polkadot. As the first running investor, and I was kind of a volunteer to be the interpreter and the translator. When the Web3 Foundation team actually came over to Asia, I started helping them along the way. So we were kind of doing things like how Super Team was doing with Solana. That's kind of the similar relationship I had with the brand I established in 2013 and 18, 17 and 18 for Polkadot early days. And I would say two cycles ago, Polkadot was the very first and the biggest interoperability solution, had quite a big rally and big hype across the developer community and in a cross-chain solution. That was probably the biggest one, and alongside with Cosmos, right? So I learned a lot about building ecosystem from that cycle. So 2020, DeFi summer came, and obviously a lot of people get to know Web3 because of DeFi summer, especially the Ethereum folks. And so I was also really just got lucky for early involved, start to get to know what is Uniswap, right? Learn about the AMM automatic market making. It was very interesting, simple design, but it actually gets very novel approach, right, to do on-chain programmable DeFi. And then obviously Aave, Compound, Yen Finance, all these new interesting protocols start coming a lot. with very strong, impressive like APY, right? So I was like degening, doing all the yield farming as well. By doing that, I learned a lot. I get to know a lot of friends, the like DeFi early farmers, like online. Some of them become like lifetime friends. So obviously, people know the journey. In 2020, Ethereum become very congested. The gas fee all-time high, leads to like even $200 to $300 per transaction fee, right? Because it was very congested at the L1. So people know we need to scale Ethereum. And I also get lucky to get approached by one of the very fastest growing Ethereum L2 ecosystem called Polygon. So they reached out to me. I joined the team actually full time early 2021, became the head of APAC ecosystem leader. I was kind of mostly focused on BD and DevRel for them. So I did a lot of ecosystem building with the Polygon. I brought like around 500 projects, a lot of NFT, gaming, different type of use cases during that cycle, right, to Polygon ecosystem. And doing that, I learned a lot about how to bring developer on board, how to work with amazing use cases, how to support them ecosystem-wise, and learn a lot about all the other use cases, right? Like NFTs, prediction market, all the other things as well. Right? So obviously, some use cases became very successful. Some use cases didn't really work out, right, due to various reasons. But I think my journey, how I orange pill myself, was actually Ordinals. So Ordinals came out early 2023, right? It was because of one of the developer called Casey Altimer. He launched that Ordinals protocol in the GitHub, and people get excited that we can actually create derivative assets natively on Bitcoin network, right? So some of my friends from Dubai, from America, also reach out to me when they shared this. They saw this, this GitHub repository, and we started reading and actually start discussing. And I think the trigger moment for me to really feel like, okay, this is very, very cool, was actually the BRC20 protocol came out, right? It was invented by Domo, of another very interesting, innovative builder in the Bitcoin space, who is actually our angel investor in BitLayer as well. He had this very simple kind of a design, right? Have very easy to understand to create a fungible token standard native on Bitcoin called BRC20. So at the time, I would say Asia community was one of the early adopters, and I was one of the first group of people start actually inscribing all the sets, all these like BRC20 assets with the Bitcoin node. That was, I would say, that was actually the real early days of Bitcoin ecosystem. Before that, it was at least in my circle, in my network, not too much there. And obviously, they have different debate about does this actually real Bitcoin ecosystem, right? And obviously, we have different generation. What we're building is actually quite new generation compared to the BRC20, the Ordinals. But my journey came from there, right? But actually deep dive and actually evangelism and also educating what is Ordinals to the community I know. And I was doing a lot of AMAs, Twitter space, especially in Asia. I made a good friends who were also very early in the Ordinal space. We realized two things, which is a big problem. And also some interesting insights, right? By being like very on pulse of the new frontier and the new primitive. One, I think a lot of Bitcoin folks who holding Bitcoin, they have been exploring use cases. So the argument of Bitcoiners don't want any use case perpetually, it's too much extreme maxi kind of stance. I think Ordinals is a good example. Bitcoiners want interesting use cases. They want to make Bitcoin interesting again. Some people say it's make Bitcoin fun again, make Bitcoin useful again. But I think there's a demand there, right, in terms of use cases as a holder. And the other argument is people start talking about if we can bring transaction back to Bitcoin network, there's going to be fees be made, right? And actually contributing as a security budget, that there will be new revenue stream for the miners. So they will become like a very important kind of sustainability, like feedback loop. Bitcoin actually network can pay for itself for the miners. Miners don't have to rely on this mining reward, which is going to have another halving and halving every 4 years. So it became like an argument. What if the miners cannot actually get enough incentive anymore to keep the hash rate high? Will Bitcoin network, lower down the hash rate and become not decentralized and secure enough, right? So I think to bring transaction and use case on Bitcoin, that's meaningful for the Bitcoin sustainability and for the Bitcoin future. So that was kind of the insights and kind of the statement I was kind of I was getting the conclusion by very on pulse on what's happening on Ordinals and BRC20 and all that. And also another conclusion: Bitcoin couldn't scale itself. It's only 7 TPS, right? It's a fairly limited kind of network. There's no smart contract native programmability. You can't really build DeFi apps natively on Bitcoin L1. The infrastructure is not, it was never designed on that, right? So for people who wants to do Bitcoin DeFi, who wants to bring the DeFi adoption natively on Bitcoin. You simply couldn't to do that. And then the gas fee was pretty high for people who wants to create all the assets on Bitcoin. The all-time high, I personally pay like almost $300 worth of Bitcoin for one transaction of doing some crazy mint. And then there was no real use cases for a lot of those BRC20 assets, right? So I think that was kind of the pivotal moment after the Ordinal Summit, September in 2023, when I met Domo and Casey and all the main builders in the Ordinal space. I feel like, okay, if I can find a solution to build things to scale Bitcoin, to bring this programmability for Bitcoin and empower Bitcoin DeFi, this can be one of the most valuable thing to build if as a builder, right, for the Web3 space in the long run. I think that's kind of the best way for me to get involved as a founder, as a builder, to build a project which can make a legacy. So that was kind of for me, like, okay, after all the zigzagging, why I end up with like trying to build a scaling solution for Bitcoin. And BitVM, probably you're going to ask why BitVM or why we are choosing this route. I think that's a more nuanced technical choice, but I think for the people who don't understand BitVM, it's one of the best design solution approach. We don't actually depend on Opcat or other Bitcoin hard fork or soft fork. We can using the existing Bitcoin architect and a Bitcoin script to build this on-chain fraud-proof kind of verification component. And that's the way we can enable this new layer of infrastructure to do scalable DeFi solutions and eventually settle on Bitcoin block. So that's kind of the reason why we end up with choosing BVM and building things around the BVM solution. And we end up with building BitLayer with my co-founder, Kevin.
So the problem that BitLayer is trying to solve for Bitcoin is essentially threefold from what you're seeing. Is you are trying to improve Bitcoin scalability, because like what you saw when you were interacting with ordinals and different kind of Bitcoin use cases is you were paying through a transaction. So there needs to be a more scalable way to use Bitcoin. You also referenced that for Bitcoin to maintain a kind of long-term sustainability and security, there needs to be more transactions on Bitcoin. So fees go to miners. And you're also seeing that there was actually demand for Bitcoiners to put their Bitcoin to use, that this idea that Bitcoiners just want to hold on to Bitcoin forever is maybe outdated, or maybe it's a view by a minority of like hardcore maxis. But you're seeing that a large part of the Bitcoin community is looking for use cases for their Bitcoin. And so these problems are what BitLayer is trying to solve. But I'm interested in how you differentiate versus other Bitcoin layer 2s. Of course, there are others who are working to solve the same issues. And there's been Bitcoin sidechains or layer 2s for a while with like Rootstock and Stacks. There's kind of the longer standing layer 2s. So you mentioned BitVM. If you can kind of dive into what differentiates BitLayer with other layer 2s.
Sure, absolutely. Thank you for the question. I think that the current status quo in the Bitcoin landscape, right? We start from the ordinals I mentioned, right? There are meta protocols, we call this. So meta protocols is not a separate infrastructure as a sidechains or L2. It's not a Bitcoin side system. It's a protocol allow users to generate assets to do interaction with Bitcoin with new functionality. But there's a trade-off on that, right? The programmability level is low. There's no native built-in smart contract capability, right? And they don't actually maintain the security. And it's not now also there's like some kind of a trust assumption. You need to trust the indexer and so on. So that's about meta protocol. There's a few protocols like kind of trying to do that. We've been seeing it's a different trade-offs. And then you mentioned about different kind of sidechains. Rootstock and Stacks is definitely two of the OGs. They started many years ago, and it's a EVM compatible or a Calamity, right? Stacks is Calamity, kind of smart contract empowered kind of a Bitcoin side system. The difference between Bitcoin sidechain or the rollup we try to build with BVM approach, the key difference are the two elements or two aspects. One is security, the other one is economic alignment. The security side is because when we talk about Bitcoin sidechains, the sidechain security is managed and maintained by their own validator sets, no matter it's 21 validator, 100 validator, and so on. So the trust assumptions is we have to trust the validator is secure. It's not Bitcoin settlement, it's not Bitcoin finality, meaning the security is not maintained and contributed by the miners. So it's different level of security, right? The second thing, obviously, with different level of security, we kind of have different trust assumption, right? People trust Bitcoin is the most highest level decentralization and a highest security network. and we kind of by default can trust Bitcoin, right? But if it's sidechain, it's a bit different, right? That's kind of the difference. The second difference is the economic layer. Bitcoin sidechains doesn't really have the Bitcoin finality, meaning there's no process of verification. Transaction is settled on the sidechain. There's no state transition verified back to Bitcoin through our recursive proof kind of approach. Without this verification component, there's no fees, as we call this security budget, paying to the Bitcoin network. So the miners, on the Bitcoin layer 1, they're not receiving any fees from this roll-up system. That's the sidechain. When we talk about contributing fees to the miners to have new revenue stream provided to the miners, that's exactly the point we're talking about, right? If we're creating a very big ecosystem, the value recruiting process mechanism back to Bitcoin L1, I think that's a crucial part and a component. So the goal is to work with miners to maintain Bitcoin network is secure, is decentralized, and also have the interesting revenue stream for the miners to pay for themselves in the long run, right? I think that's kind of how we see the vision. So that's why with the BVM approach, what the differentiator is, we don't actually depend on the Bitcoin soft fork and hard fork, like the Opcat or the other kind of BIP proposals people are being proposing. Different people have different opinions. Some of them are fairly subjective. It's very difficult and challenging to getting the entire network with across all the Bitcoin cores, the whales, the miners to have one solid social consensus and to get one thing approved. It normally takes years. BVM doesn't really need that. We are using the existing Bitcoin script to build in this kind of verification components, right? To verify the transaction through this fraud-proof kind of on-chain fraud-proof approach. The key difference between us and other kind of sidechain systems in the Bitcoin space. And there's a few other kind of Bitcoin BTC5 project, right? We kind of don't compete with them, but I actually collaborate with them, right? We're talking about those kind of a Bitcoin yield-bearing kind of protocols, including, Soft BTC, Lorenzo, Lombard, you name it, right? For that, we actually have a similar vision in terms of vision, right? We want to empower Bitcoin liquidity to bring those liquidity to all kinds of DeFi use cases, right? So for actually providing yield for Bitcoiners. For that part, the key difference is whereas using the WBTC, which is just a multi-sig, right, to wrapping their BTC assets, our BVM bridge, which is empowered by BVM approach, is more trust minimized. It's a one out of one trust assumption. So our bridge we are launching as a kind of the key innovation, which we are going to announce soon and launching the mainnet version this month. This is a third generation Bitcoin bridging solution we're delivering as a product. So in a summary, the differentiator of a BitLayer on the product or technical side is two products we're launching, right? One is Bitcoin Trust Minimized Bridge. We call this third generation Bitcoin bridging solution. And the second is the Bitcoin rollup. The rollup actually can settle transaction on Bitcoin block. So it's Bitcoin finality and Bitcoin security. These are two key infrastructure products we're launching. And I think on the non-technical side, if people ask, right, okay, it's not just the tech, but also other things around it as a team, as an ecosystem, all that, right? I think what we are unique as a team in terms of the experience and also network or resources wise is we're very well connected in the Bitcoin mining space. We're one of the first team actually getting strategic support and partnership with the top mining pool, such as N-Pool, F2 Pool, and Spider Pool, which we announced that a couple months ago during the BTC Las Vegas. That's like first ever in the Bitcoin space. And the second thing I think I mentioned with my experience and my co-founder experience, Kevin, who also built multiple EVM chains, worked for like Heco as a major ecosystem chain for Huobi, and worked for Celestia before. We had quite a deep experiences building the programmable use cases in ecosystem, right? And we know how to build ecosystem. So we're not like a Bitcoin maxi. Actually, we actually want to know the ecosystem. How does the playbook work? And I think the most important thing is both have a good access and a go-to-market strategy knowledge, both to the east and the west. We are one of the first team that gets supported by the major ETF firm, right? We're the first project invested by Franklin Templeton. So we've been pretty actively working with other institutions as well. I think that's the major one, adoption potential, right? This cycle is we have all the ETF firms, all the institutions, the issuers now bringing the liquidity, designing all kinds of Bitcoin yield-bearing products, right? Issued by them. So these are kind of the things is actually our key focus use cases wise as well. I think that's kind of the whole package with how we, differentiate ourselves as a team, as a project, as a technology solution compared to others.
Great stuff. Really interesting. So I'd love to kind of dive deeper in your product set. So you launched mainnet recently. And in the following weeks, you are set to launch a new bridge and the rollup, your V2 BitLayer V2. Can you explain a bit how your mainnet will be upgraded with the bridge and the V2? Like what can you do in mainnet now, and what will you be able to do with the V2 on the bridge?
Yeah, sure. So let me just kind of first zoom out and actually just go through the whole journey of BitLayer, right? So we started our project late 2023. Right? I mentioned I'm kind of doing this ordinal season, and also after the BVM white paper came out, we started doing research about it, and we see this opportunity. We see a lot of people trying to build scaling solution around Bitcoin, and there was a lot of demand in the ordinals and Bitcoin community. There was a lot of big attention on that as well. So that's kind of how, and the context of when and how we started BitLayer. The first version of our mainnet we launched last April. So we started to kick off, this EVM compatible size system infrastructure at V1. We been working with over 200 different type of DeFi protocols, and we use wrapped version BTC as gas fees. It's pretty fast settlement time, hundreds of times cheaper than the Bitcoin L1 and in terms of gas fee. And I think that's kind of how we started. So the new things I mentioned, right? You also asked the two new components and product we're launching this year and basically this summer, where we actually have a few launch videos we can announce very soon. First one is a BVM bridge. So as I mentioned, we claim that we categorize this as like this Bitcoin third generation bridging solution. And the key difference between us and other previous one solution is on the trust assumption side. So and to summarize how does bridge works is we using Bitcoin script buildings to build this like on-chain fraud proof approach. So for the people who heard about fraud proof or optimism rollup kind of terms in the Ethereum world, it's basically with a set of validators. Right? They kind of maintain the bridge at the operator as long as they actually need to make deposits, right? And they have the incentive to make sure the security of the bridge is secure. So when they feel there's like malicious transactions happening, they have the incentive to actually initiate the challenge game to make sure the transaction is proved it's secure. And if it's actually not secure, they actually be able to halt it to stop the bridging transactions. So there's like we have pretty trustworthy professional kind of operators we're going to onboard together as a first wave for our BVM bridge. So the key difference between our bridge compared to, let's say, WBTC, which is the multi-sig centralized custody kind of wrapping solution, is in WBTC, we need to depend on the majority of the signers and of the bridging operators are secure and honest. Otherwise, the bridge is not secure. So the best example we say it's not actually the ultimate best solution as a Bitcoin bridging solution is the recent hacks happened with Bybit, right? It's actually just a multi-sig hack. It's a 4 out of 4 multi-sig they set up together from the Genosis, right? And because of the UI, issue, and they get fooled by the hackers, and they initiated the transaction and eventually send the transaction to the hacker wallets. So that was kind of the reason they have this 1.5 billion, very big amount hacks event, right? So things like that happen in history multiple times. I personally experienced that with Poly Market in 2021 as well when I was working Polygon. It was also a multi-sig hack. So I think in a way we can draw the conclusion for the future of Bitcoin DeFi adoption, especially from institution and for like, let's say we have hundreds of millions of Bitcoin users actually using Bitcoin DeFi and doing things, and we have billions of TVL, right, and on-chain assets being rely on all these bridging solutions. The problem is we can't just single-handedly depend on a multi-sig setup. I don't think that's the best design setup that as a bridging solution. So that's kind of how we want to innovate on the Bitcoin bridging side. So that's yeah.
Sorry, and just to follow up on that, so your bridge solution is, instead of being centralized, controlled by a multi-sig, it's controlled by a set of validators who are incentivized to
maintain security. Yeah. So our security assumption is as long as one operator is honest, they have the incentive to maintain security. Whenever there's actually some potential malicious transactions, they can initiate the challenge gate, right? That during the challenge gate process, we can verify or disprove the transaction. So the funds of the users will be secure and it will be stopped.
And how big is that validator set? And Can anyone become a validator?
We're going to start from like 30 operators.
Okay.
Yeah, and a lot of them are pretty industrial, professional kind of firms who actually being validators or maintainer of all kinds of infrastructure for many years. And eventually we can open up on that, right? I think the dynamics between how large of the maintainer and what's the best economic design, we are making a lot of simulation and to actually simulate the best optimization. But I think the first wave is good enough to kick off. But I think principally the difference, as I mentioned, right, it's not a multi-sig setup. We don't need to rely on the majority of the signers are honest to maintain the bridge security. So that's kind of the key difference we're offering as a new kind of frontier bridging solution, which is already ready. Production-wise, we finished the auditing by a few major auditing firms globally, and it's kind of already live. So for the users who want to try out, we actually will kick off like a program to give rewards for people who wants to bridge their Bitcoin, and it's one-to-one account packed and a bridge via our BVM bridge. Whoever to interact that, we kind of give them some small rewards. But all in all, this is like one key components to empower Bitcoin DeFi, because without that, there's no programmability, right? The BTC sits in the cold wallet or whatever wallets in Bitcoin in network. You can't really do native lending and all kinds of use cases on DeFi side, right? So that's basically summarize the first product we're launching. The second one, which I mentioned, the rollup, right? So that's I think the key challenging component, the entire kind of Bitcoin layers kind of ecosystem aiming to achieve, to launch. There's a lot of nuances, a lot of kind of engineering challenges around that, and a lot of different trade-offs. The rollup infrastructure product we want to launch, after we finish the auditing our GRAS-16 verifier, then we're able to actually launch that. So our solution, the unique side, or key innovation technically, is we're able to find this chunkered approach. We call this recursive proof without sacrificing the security level, and we actually will maintain the Bitcoin security on the rollup side. But we're able to lower down the proving size hundreds of times cheaper compared to the original design and for other approach. I think for people who are like wants to understand the technical details and nuances on that, you can kind of watch out the BVM org, which is this open source Bitcoin BVM technology alliance. BitLayer is one of the key engineering team as well. There's like multiple versions of BVM solutions came out. We start from BVM 1, now it's BVM 2, and actually recently there's like a new solution proposal called BVM 3 came out with like the GC kind of circuits kind of solutions, which is still kind of some conceptual stage, but it's pretty interesting and promising as well. We're doing a lot of the research together with other team. But all in all, I think the production-ready rollup model we are launching in the next month or two after we finish auditing, we will be one of the first team achieving this kind of Bitcoin settlement as a Bitcoin real rollup. As I mentioned, it's Bitcoin security, it's Bitcoin settlement. We're paying fees to the miners, so that's quite different kind of infrastructure setup compared to the current Bitcoin sidechain kind of systems. Right? So these are the two products we're launching this time.
Very cool. And what about programmability? Does BitVM allow the same level of programmability than the EVM and other smart contract chains do?
Yeah. So BVM stands for Bitcoin verification mechanism. So it's the verification part. So the smart contract layer, we start from the EVM. I think in the future, our vision to provide this like high scalable infrastructure solutions for Bitcoiners. We're looking at all the new kind of frontier, like such as Monad and Mega East, what they are doing as well. So we call this like parallel EVM execution, right? Which is like a very new frontier of high performance, even like real time execution and settlement. I think that's kind of the future. The reason we start EVM, the design choices, I think is pretty obvious, and I think there's a lot of nuance behind it. Reason one is EVM is battle tested. It's the most well adopted smart contract framework for all the DeFi users. So for any DeFi users who you are building things on, let's say Arbitrum or other Ethereum ecosystem, deploying and bridge over to BitLayer, our network, is pretty seamless. You don't need to learn a new language. You don't need to recode everything. You can pretty straightforward in a way deploy a smart contract. The only difference is like we use Bitcoin as gas fee. Most of our liquidity assets is actually with Bitcoin. right? And it's different ecosystem with different user base. I think that's kind of the best way to onboard users and developers to lower down the barrier. I think that's kind of the reason why we start from EVM, but we wanted to expand to new frontier, kind of the programmability solutions. If you ask me, is EVM going to be the perpetual best solution in the world? My answer is we'll see. I think a new frontier will needs to happen, especially if we talk about millions of users, real time, fast kind of execution use cases, such as like, I don't know, on-chain prediction market or other things, right? Sometimes you have the crazy amount of users doing that at the same time. Then EVM is actually maybe too slow for that, right? So things like that. So I think for BitLayer, we want to be future proof. We start from the most battle tested ones as EVM, but we can aiming for like the higher performance, parallel execution kind of, smart contract programmability infrastructure as our V3 of kind of future, engineering frontier. All in all, I think the key capability of our engineering team in BitLayer is we work with major companies like Huobi and Alibaba and Celestia and other kind of major companies. We know how to build scalable solutions, make sure it's secure and robust. And since last year, we launched our mainnet. We made already over 65 million transactions. We never get any crash or any security issues. So it's been pretty smooth and robust right now. And we want to keep maintaining that and even improve our scalability in the next stage.
Perfect. I want to talk about the Bitcoin ecosystem more broadly. So,
Sure.
like I mentioned at the start of the conversation, it really has been Bitcoin's year. It has outperformed almost any other asset, and it's really solidified its place as a global store of value. I'd love your thoughts on kind of what's driving the Bitcoin rally with a new all-time high. And also if, with the store of value narrative, pretty consensus at this point with, governments buying Bitcoin, major companies using it for treasury, the Bitcoin ETF, and so on. Does it still make sense to use Bitcoin as as a platform for builders? Because there's always a tension there between store of value and platform, and we see it in the Ethereum ecosystem too. So yeah, like the two part of that question, like what do you think is driving the Bitcoin rally and the Bitcoin price? And how do you see this tension between store of value and platform playing out?
Great question. There's a lot of moving parts and nuances behind that, right?
Mm.
So first of all, yeah, Bitcoin has been definitely proven as very strong store of value. It's digital gold. It's digital commodity. It's incorruptible. It's been very well adopted globally by the nation state, by the big companies, by the retail, by the OGs and all that. And also, I think the engineering side is actually lacking due to the lack of programmability, right, and scalability. But that was the kind of the reason why we had Ethereum, right, in the first place. If Vitalik and the founding members of Ethereum can actually build that with Bitcoin originally from all the way to 2013, and we probably don't even need Ethereum, right? So I think that's kind of the history. But I think because of ETF and all that, like this rally definitely is being very heavily supported and pushed by the institution. So a lot of transaction or new liquidity came from the ETF, right? The traditional finance route. But I think my kind of hot takes on this is it's great to have all the institutional adoption, but we also need to make sure Bitcoin's network needs to be decentralized, needs to be usable. It needs to have proper sustainable future. So I mentioned if nobody actually used Bitcoin's network, a lot of Bitcoin just being put in the cold wallet, like there's no real use case around Bitcoin. The network has been pretty idle. There's no enough transaction happening on the network. There's no fees being generated, right? The mempool is kind of empty. I don't think that's the best future route. When we having this economic debate, how can we maintain all the miners actually economically incentivized, right? Can we have enough hash rate to provide to the community and to the network? So I think my vision about Bitcoin in the future is an important store of value, but it's also an important decentralized network. It's the most decentralized network, which is censorship resistant, and it's decentralized. It's permissionless. Everybody who wants to access Bitcoin, they can open up their nodes. Obviously, for the people who wants to maximize their rewards right now, they need to join the pools. That's another debate about Bitcoin mining. Maybe we talk about next time, another topic. But I think it's the most precious, interesting, mother chain, we call this, right? And it's important to realize it's not just assets, it's also a network. And so Bitcoin is being generated as a proof of work, as a reward. But this network is very, very important. If we're creating this programmability components for Bitcoin as like a roll-up system or L2 system, we call this, we bring the use case of DeFi eventually settle on Bitcoin block. Then we can generating more fees for Bitcoin miners. We actually can make Bitcoin more useful, especially for the holders, right, who have not actually gaining any yield. So currently, right now, a lot of the users are paying custody fees to hold their Bitcoin. With the infrastructure and use cases we can eventually empower, users can actually earn yield by staking and doing things by holding their Bitcoin. So that's actually the opposite of actually paying fees, right? But actually, make them more incentivized to use Bitcoin and explore yield opportunities. Obviously, with yield opportunities, there's like different setup. Some of them actually have different risks, right? But I think this is kind of the liberal DeFi infrastructure or market we want to create, right? Some people will never use any of these things, which is completely fine. We kind of call this Bitcoin maxi. But from the experience since 2023 till now already, we see more and more Bitcoiners actively exploring use cases. So I think there's demand there, right? It's not 100% socially aligned. Every single person have exact same opinion. But because of this debate and also different people have different needs, different risk appetite, what we want to offer is this new opportunity and a new capability. It shouldn't be a very binary thinking, okay, Bitcoin just gold. So gold means you shouldn't do anything. And the network should be nobody use it. Everybody just keep to hodl. I think in the future, we're going to have the economic debate and the security debate when nobody actually using the network at all the Bitcoin holders just getting the Bitcoin exposure through ETF. There's no on-chain activities happening in Bitcoin network. I don't think that's the best future we sign up for.
And how do you see Bitcoin's DeFi place in the broader blockchain ecosystem versus other smart contract chains? Like, you see that Bitcoin layer 2s and side chains will overtake Ethereum and other smart contract chains in terms of activity and TVL? Like, will Bitcoin just become the main hub for blockchain activity? And, this considering everything that's happening in the broader ecosystem with Robinhood and PayPal and, like all these fintechs and banks and, Shopify, with like all these moving pieces coming on chain, do you think Bitcoin will be the main hub, or do you see it like it will be more of like a cross-chain ecosystem with many different chains?
Yeah, I think for that, I'm having quite different opinions. This is just my personal opinion. Mm-hmm. Some partially stand for our BitLayer team's opinion as well. I think we are taking a relatively multi-chain stance on this. We are not Bitcoin laser eyes or maxi. We believe Bitcoin layers or Bitcoin DeFi has a huge potential because of the fact a lot of Bitcoin assets has not been put into use. So if we look at the stacks, right? Bitcoin has around 2.5 trillion on market cap. I think it's more than now, right? Because of the all-time high we just hit. I think it's going to a couple of trillion, even 10 trillion in the future. It's one of the largest, digital assets in the world. A lot of the Bitcoin assets has not been contributing to provide like a liquidity for DeFi ecosystem. Whereas Ethereum, it's a heavily and used network, right? And it's proof of stake. A lot of Ethereum has been put into staking as a validator, right? A lot of them be staked in Lido and all that. The DeFi ecosystem Ethereum is pretty battle tested, right? In the last 7 years, all the way from 2020 till now, it's the last 5 years. But I think the true potential is unlock the idle Bitcoin liquidity. Let's say if it's 10%, that's already 250 billion. A huge amount of liquidity we would potentially be able to unlock. And then those Bitcoin holders actually can explore and have access to different type of yield opportunity, right? I think that's the huge financialization potential. If we look at the other side of the spectrum, right? On Ethereum DeFi, you have over at least 50 Ethereum L2s, right? They're still kind of up and running, operating with different verticalization. Some focusing on pure DeFi, some focused on NFTs, last cycle, some focus on gaming, some are focused on other things. There's different type of infrastructure focus on that, right? People wants to solve the problem with a decentralized sequencer and a ZK and all that. So I think with the Bitcoin layer 2s or Bitcoin side system, right, you mentioned, it's very early stage, right? The way to grow is going to have different kind of scenario. I think the scenario we are kind of building and getting towards to is having this multi-chain ecosystem approach. So our BVM bridge, we actually want to empower and activate Bitcoin liquidity and bring that our YBDC, which is yield-bearing BTC, one-to-one packed to different ecosystem. So to some degree, for partners such as Sui, Arbitrum, Base, Sonic, and Plume, and a few others, and also soon will be Solana, we actually are not neck to neck competing with them. We actually being the Bitcoin liquidity source with them. BTC DeFi, or we call this Bitcoin DeFi, is going to happen across different ecosystem, across different execution environment. So I think that's going to happen. We want to be the key infrastructure to empower Bitcoin DeFi. That's kind of our goal, right? So it's an interesting dynamics, we call this, right? In a degree, we are kind of partnering with different non-Bitcoin systems or L2s like EVMs or non-EVMs like Move and Solana. And also in the future, in terms of transaction execution, we are kind of competing for users' attention and adoption. But I think one thing I'm pretty sure, it's not just one solution over the other and winner takes all. I think there's still going to be Ethereum ecosystem and EVM or the non-EVM systems such as Sui and Solana is still going to happen. And they're gonna still provide their infrastructure solution to interesting use cases, specifically for their ecosystem. But I think there's a solid, very interesting primitive, especially in the Bitcoin DeFi side. No matter it's low frequent kind of DeFi use cases or high frequent trading use cases, but it focus on Bitcoin layer twos, using Bitcoin as assets, using Bitcoin as gas fees, to do things. It's gonna be an interesting market. That's kind of the market that we're aiming for, and we want to serve that demand.
Super interesting take. And so your thoughts with partnering with other chains, Ethereum Layer 2, Sui, and Solana, and so on, is the way to do that by becoming a bridge to those chains so that Bitcoin can be used in other ecosystems?
Yeah. So I think the key product layer is the YBTC, right? So we currently are launching our YBTC assets, creating liquidity pool across multiple DeFi protocols on Sui already. We made an announcement 2 months ago. And Sui, in case people don't know, it's a pretty high scalable Move language infrastructure, right? They announced their Bitcoin DeFi strategy as one of the key focus on their ecosystem growth this year. So we'll be one of the first wave of Bitcoin partner with Sui, and since a couple of months ago. And so things have and activities, going to happen while we are the liquidity source of YBTC bridging over, right, via our BVM bridge. So that's the canonical BVM bridge between Bitcoin L1 to Sui natively. We're going to build and deliver. With a few other EVM L2s or other ecosystem, the setup is basically we are building the bridge between Bitcoin L1 to Ethereum L1 to start with that. And once the YBTC enter Ethereum L1, we're going to use layer 0 and Chainlink CCIP to do the interoperability across chain solutions to bridge the YBTC to enter other EVM compatible infrastructures. So currently Base, Arbitrum, and quite a few others are already kind of in close talks with us. Some of them are already we are providing liquidity. So I think this is kind of the way we're seeing Bitcoin being used across different ecosystem. And we want to see more and more YBTC in terms of the adoption across different wallets, no matter it's whale or retail, small retail, be able to actually gain yield and holding YBTC and bridge over from Bitcoin natively to via our bridge. That's a very interesting kind of a strategy we're taking. We learn a lot by partnering with different ecosystem, and I think it's a pretty exciting journey along ahead. By working with many other new ones.
A question on YBTC: where does that token get its yield?
So it's in a way you can categorize us as the on-chain fund of fund, right? We obviously we provide some period of an incentive program for YBTC holders to provide the liquidity to different DeFi protocols across different ecosystem. So we incentivize a little bit in the beginning, but in the long run, we want to make it sustainable, right? We're not gonna just keep forever doing that. YBTC yield come from the liquidity pools from the DeFi protocols. For example, in top DeFi protocols on Sui, like on DEXs or lending, like such as Navi, Momentum, or like Rufen, they provide yield like APY around 4% to 9%. That these are the kind of yield YBTC holders once they provide their liquidity to those DeFi protocols, they're going to get, and it's fair, liquid, and they actually be able to withdraw in relatively short period of time. So that's that. And I think a lot of our ecosystem partner are actually kind of exploring, providing some kind of additional incentive on top of the DeFi protocols APY. So like Sui is kind of doing that. There's a few other new ecosystem we're exploring. I think different layers of yield, right, and different use cases of yield with different risks, right? So we also trying to educate the market. There's no such a thing called a completely free launch, but we want to make sure it's transparent. What kind of risks they are kind of signing up with whatever yield they're getting, right? So it's an interesting dynamics and equilibrium, right? If there's actually no yield at all, then there's no attractive, right, for people to actually bridge over to do things. If the yield is too high, obviously there's underlying risks, right? People have certain type of PTSD with all kinds of DeFi hacks in the past, or like things like Luna, right, with economic hacks. I think the sweet spot we're looking at with Bitcoin DeFi in terms of the yield rate is across like the range across like 4% to 8%. And obviously, if there's some incentive program or additional reward system program, then it's a slightly higher. But I think that's kind of the yield we want to maintain and to explore sustainably for the YBTC holder in the future.
So the idea is that YBTC will be deployed across liquidity pools in different ecosystems, and that will be used as collateral to borrow against.
Yeah.
And so that the APY paid by borrowers will be the source of yield for people who are depositing
Yeah, so on the lending protocols, yes, that's kind of the lending yield, sources. There's like PerpDex, so on-chain option protocol, and a few other kind of yield kind of protocols we are actively exploring. So on BitLayer network itself, one of the biggest TVL DeFi protocols called Decing. They're going to achieve like over 2 billion TVL soon. So they have this multi-strategy kind of market neutral kind of trading strategy. They are getting yield, providing sustainable yield to the liquidity providers. So I think if we talk about the sustainable long-term yield sources, right, for the liquid provider, I think eventually it comes down to trading. Lending is one of the key components. The second part is trading. Like there's a lot of multi-strategy, market neutral kind of on-chain yield protocols we are seeing. They are doing some interesting stuff. Some of them set up different type of routes. Some of them doing other kind of setup. Yeah, I think these kind of yield markets is getting more and more matured across different ecosystem. So we want to be the Bitcoin partner for them.
Super interesting. Okay, and then to start wrapping up, what other use cases do you see taking off on BitLayer? I think it's really interesting what you mentioned about Franklin Templeton being one of your investors and how like institutions have been a big driver for adoption and for price. Do you see a lot of the kind of RWA tokenized money market funds also coming to BitLayer?
Yeah. Well, so for the institution, there are two sides, right? You have the buyers, right, who actually just deploy liquidity as the buy side. There's also the issuer, right, who being the endorsement source, right, for us to issue our Bitcoin yield-bearing ETPs, such as 21 shares, which is our active partner. We are working on that together. Example, to have the Benji money market fund, which is more on the money market side, right? That the yield actually come from the treasury bill and so on. And so we bring the AUM to that. So it's quite different kind of a relationship base, right? When we talk about the new use cases, right? So I actually want to start from the on-chain native ones first. We're seeing some interesting Bitcoin-focused prediction market or high-frequent trading protocols will have very interesting potential. So we all know Poly market, right? It's on Polygon. It's very EVM focused. I think there's a wave of Bitcoin holders wants to use the Bitcoin to do some betting. It's not like necessarily the gamblify or on-chain gambling. It's more like a prediction market. There's some interesting use cases they're exploring with BitLayer and maybe some other Bitcoin ecosystem as well. We see there's some interesting potential. The second part is the on-chain option protocol. So it's kind of like Deribit, but without actually the rigorous KYC. It's actually the kind of hyper liquid kind of on-chain DeFi native kind of a route. But I focus on Bitcoin assets. They do the option. They are able to allow people to buy and sell the call and put options, right? So it's kind of like a predict the Bitcoin price as well, like to do some on-chain hedging and so on. So I think that's very interesting use cases. Obviously, AI is really, really, really very hyped. A lot of discussion, a lot of attention is centered around AI. A lot of AI engineers and some of the use case builders had some very good conversation with us. We're pretty bullish on AI, not necessarily like the meme coin launchpad kind of AI, meme coin thing, but more like using AI agent as a very interesting solution and a feature to empower some kind of micro transaction or on-chain yield optimization and all things like that. And so that's like some new frontier. We're seeing AI agent powered kind of a payment solution. I think that's pretty interesting. With Bitcoin as underlying assets and things like that. Honestly, for us, we don't really have very biased take on which use case is better than the others. We're not use case builder. We are the infrastructure builder. We're here to support them. And sometimes we actually take a very concentrated, heavy hands-on support bet to some of the team. We really feel they can actually become very meaningful and achieve the product market fit. And we want to grow with them. Their success is our success, right? That's kind of how we see the use cases. But in terms of which use cases can actually win and become like the next killer app on the Bitcoin ecosystem, we don't necessarily have that much strong bias and strong opinions. I think we want to make this like fairly decentralized, permissionless, and we are trying to be also open-minded and humble to learn from the market. Right? There's like all kinds of new use case frontier and primitive every 3 months in the Web3 space, and that's kind of the beauty of that. You mentioned about RWA. So with RWA, there's an interesting infrastructures like Plume and a few others, right? They're building very interesting things. We are their Bitcoin partner. YBDC is already on Plume. And I think RWA with Bitcoin is interesting use cases. I think people are still kind of exploring, meaning that no matter it's like on the yield part, right? For Bitcoiners to getting RWA yield, that's kind of one scenario of use cases. As I said, tokenized stocks or other kind of assets, but on Bitcoin network. We have a few conversation with a few protocols kind of trying to do that, like the X stocks, right? Like, Robinhood wants to work on that, right? Things like that. I think that's a much more complicated product design that require even like a regulatory piece and other piece, right? And like on-chain, off-chain, off-ramp, AML, and chain analysis kind of solution together. That thing is very interesting. We are very looking forward for a like very solid team to build with us. We're happy to support liquidity and support, user adoption, go-to-market strategy campaign with them. Yeah, we are kind of in the process of looking for good use cases to work with us once we launch the V2 version.
That's exciting. Awesome. Okay, so now to wrap up, how do these builders that you're looking to come to your ecosystem, and also traders and users, how do they get started with BitLayer?
I think, the best way to start with is to understand what we do is follow us on Twitter. It's BitLayer Labs. Our website is BitLayer.org. We have this ecosystem column and we have the ecosystem leaderboards. In that, you can easily find all the top TVL, top transaction, and the top popular projects in our ecosystem. And you can, for the developers who wants to try out, actually deploy their smart contract on BitLayer, we have pretty well self-explanatory documents on the docs at bitlayer.org. That's our Gitbooks. We have the updated new version of white paper already launched, published on the website for the people who wants to deep dive on our infrastructure, backend, and architect piece and design. Feel free to read that. Yeah, we're looking forward for engineers to discuss with us. I think we are very close to launch our governance token. We're gonna open up our governance components for the validators, for the ecosystem builders, for our token holders to be the ambassador as well. And so I think soon we're gonna launch our ecosystem fund on BitLayer, which we're gonna use that to support very amazing builders. We're gonna work together. I think the approach, how we can support and incentivize or give or whatever grants or how we support in liquidity to use cases, we're going to take a bit different kind of approach compared to the Ethereum ecosystem. Probably will be more tailored, concentrated approach. We really want to work very closely with some of the use cases we believe in the long run, and we're going to work with them very hands-on, deeper level. So yeah, pretty excited to explore collaboration and synergies with the builders who are interesting to build interesting things. Of course DeFi, but also on top of DeFi, other use cases. But on our net ecosystem, I think this is the really right timing to be one of the builders in the Bitcoin DeFi frontier. And we're going to have very interesting amount of new liquidity will be unlocked once the V2 products were launched with the Billion Bridge and with our BitLayer rollup. As you mentioned about institution, I think institution adoption, it really comes down to one or two key partners where we have some kind of a pilot project as like use cases. right? So the case studies we are going to have with 21 shares, with Franklin Templeton, I think it's very important. We are actually talking to other institutions as well. I think 2025 is an amazing year. A lot of institutions have genuine interest and a lot of good understanding about what's happening in Bitcoin already. They understand Bitcoin as assets, as a network. We are now just need to provide all the new information about the possibility we are going to unlock, right? So I think a lot of institutions will become the user, even become like some of the builder in the Bitcoin DeFi space as well.
Will be exciting to see. And then finally, if you can provide more details on your governance token launch, will this be via ICO or will part of it be an airdrop? Yeah, any more details that you can provide?
We have quite a lot of airdrops for our previous campaigns. Users, they're going to get airdrop like rewards. And a lot of the community members have been waiting. So we're trying our best to really getting close to the actual finalized date. I think it's very soon, probably even by the time when people watch the video, it's already out. We'll see. So we're talking about very close, very close. The token actually have utility of the governance. We have access to fee switch. They're able to actually participate in the voting and a few other kind of key ecosystem governance components. In the future, BTR token might also become one of the gas fees for our network. Currently, we're using the wrapped version BTC as a gas fee. So there will be like different type of use cases for our BTR token. As a utilities, we are going to launch through different kind of program for specific platform. How we can launch it? I think people need to stay tuned. The news updates will be on Twitter. I think that's the best way to stay up to date about how for people who are interested to work with us to have some exposure on BitLayer to participate. I think there's some interesting opportunity to participate. I think one name I can mention because it's 100% going to happen. That's Binance. Some interesting campaign we're going to launch with Binance on their Web3 wallet. So yeah, for the people who already have Binance wallet, I think that's pretty handy. For the people who don't have or maybe cannot even register, I think we are going to have other campaigns such as with Trust Wallet, with Coinbase Wallet in the near future. So a lot of these we're kind of preparing. So that's for the retail. For institution, yeah, as I said, a lot of partnership. We're kind of still work in progress. I think we're gonna announce the news very soon.
Awesome stuff, Charlie. Thank you so much for your time. Great getting to know BitLayer better, and yeah, I think you are taking a very differentiated approach to the Bitcoin Layer 2 ecosystem. And yeah, it's been really exciting to see all of the activity happening on Bitcoin and seeing kind of your kind of solutions that will enable even more activity to come to the original cryptocurrency. So thanks again for joining me. It was my pleasure.
It was a great time to talk to you. Thank you very much, Camila.